Let's talk about one of the most fundamental concepts in technical analysis: resistance and support lines. Resistance and support lines are graphical representations of price levels at which a particular asset has had difficulty either rising above, in the case of resistance, or falling below in the case of support. These levels are usually determined by examining a security's price chart over a specified period. A resistance line is a price level or a price trend line, in red here, that a security has struggled to move above in the past. It is typically formed by connecting two or more high points on a chart. When a security's price reaches this level, it tends to face selling pressure as traders take profits or enter short positions, causing the price to fall back down. On the other hand, a support line is a price level or a price trend line, in green here, that a security has struggled to fall below in the past. It is typically formed by connecting two or more low points on a chart. When a security's price reaches this level, it tends to face buying pressure as traders see it as a good opportunity to enter long positions, causing the price to rise back up. One thing to keep in mind is that these levels are not set in stone and can be broken. When a security's price breaks through a resistance level, it is seen as a bullish signal as it suggests that there is enough buying pressure to push the price higher. Similarly, when a security's price breaks through a support level, it is seen as a bearish signal as it suggests that there is enough selling pressure to push the price lower. Thank you for watching.